Well, hi, everybody, and thanks very much for joining us on what I think is going to be a really interesting panel with a bunch of experts on open banking in North America to talk through what's happening in the North American market on open banking and what the future may hold. I'll do some very brief introductions of our distinguished panel. I think we could take up the whole 45 minutes going through their backgrounds. But I'm Steve Boms. I lead the Financial Data and Technology Association of North America, which is a consortium of fintech companies that are pushing for open finance in the North American market. And we have Alex Yang, who's the Director of Cash per API and Global Open Banking Strategy for Bank of America. Abhishek Gupta is the head of BBVA's open banking platform. Sam Taussig is the Global Head of Policy for a small business lender, Kabbage. And Jeanette is the lead counsel for financial services for Gupta. Guys, thanks very much for joining us. The way that we've all decided we're going to structure this conversation is we'll have one person who I'll ask to take the lead in responding to a question, and then hopefully this becomes a dialogue for each of these questions among these very talented experts. So Alex, I think we'll start with you, if we could. Let's just level set. So in your view, what are some of the initiatives across North America ongoing right now that are leading us to open banking? And I would include technology developments, industry consortia, and policymaker conversations in that bucket.
Sure. I think the North American market is definitely influenced by the open banking regulations from elsewhere around the world. First, it started in Europe and the UK. It proliferated across many countries in Asia. And right now, Canada is also considering whether or not the introduction of those regulations will enable more open data access for consumers and the technology providers that they choose to use. From my perspective, serving the corporate market for Bank of America, the open banking regulations and the impact has to be evaluated both on a letter of the law as well as the spirit that open banking was meant to convey. And for North America or the United States market, I'm not sure that we'll ever introduce regulations that impact that. However, what we do have are industry groups that attempt to replicate and encourage best practices. Industry groups like the Financial Data Exchange, very focused on safely sharing data between data aggregators, between financial institutions, between fintechs and big techs who may want to make use of that data. There are also industry consortiums like the Affinis organization, which is a spinoff of the NACHA Council, and they're more focused around commercial banking and the data and those that depend on it. And then, of course, SWIFT, the consortium of banks, also very much into the idea of open data sharing for participants.
Any other thoughts from the panel on developments kind of at the high level of open banking in the North American continent?
I would say, I would just add on, I feel obliged to say something here for our regulator friends, since I used to work at the OCC. While I do think that there's kind of less of a centralized approach here than what we've seen in Europe, there are some, kind of regulatory guidances and things that have been put out by the OCC, which I believe put out some FAQs a couple of months ago. And we've seen the CFPB somewhat weigh in with some data sharing principles and different symposiums and looks at data access. So I do think that there are kind of regulatory activities that have been put forth by our regulators in the U.S., but definitely agree that it's really more of a private consortium initiative in North America.
I want to frame something, Steve, before we continue any further here. A lot of us often forget the purpose of open banking and open finance when we're having these conversations. And we sometimes get lost in the weeds with respect to how North American regulatory policy works. At the end of the day, the promise of open banking and the promise of open finance here really is a positive externality for the end consumer or the end small business. It's making their lives easier. It's giving them greater control over their finances, giving them greater information to ultimately make better market choices. So it is wise for us to all row in the same direction for greater market choice and competition. That being said, the way that we're structured in the United States from a regulatory perspective is not necessarily conducive to creating an open banking framework that's going to work ultimately for the end customer, because they're not necessarily represented in each of the agency, the oversight structures, mandates, or missions. And we as industry often have to play that telephone game between agencies and legislators and policymakers and think tanks, and of course within our own industry, to ultimately make sure that at the end of the day, whether we're talking about a technology standard, a liability standard, or just actually executing on the end task here, that we're doing it for a competitive marketplace that's going to serve that end customer. So I just wanted to take that quick moment to recognize that and make sure that we frame that throughout the conversations, not only today, but really in any open finance, open banking conversation we're having, frankly, in any market and jurisdiction around the world.
So Sam, if I could maybe just press you a little bit on that for a second. Jeanette mentioned that the CFPB has weighed in with data principles in the symposium. We've heard from them in the last few weeks that there is an advance notice and an advance notice proposed rulemaking on Section 1033 of the Dodd-Frank Act. How do you see that playing into what you just referenced?
That's a great question. So at the end of the day, I think there is some leadership to be had. And, I very much support what the Bureau is doing with respect to moving this conversation forward. I think the advance notice, to have an advance notice of the rulemaking is a way to start that conversation and bring in those different stakeholders and viewpoints. Specific to that, there may be a need for regulatory or government action to push this forward and ultimately create a data right. But to get there, we have quite a bit of work to do. Unlike other markets and jurisdictions, the United States does not necessarily have a super strong, well-recognized and shared data security, privacy, and cybersecurity framework that all participants can operate from, and frankly, build from an open banking standard, whether legal or technology, from that. So starting this conversation to help basically formalize what are the assumptions that we need to go into this to make this work is really step one. And I believe that's what the Bureau is doing. And frankly, commend them for taking that step. But there's a lot of level setting that has yet to be done here.
That's a great segue, Abhishek, to something I'm hoping you might take the first stab at. So what Sam was just talking about is kind of future potential state, right? And that's, who knows how long down the line that is, or even if we get there. But as we just heard kind of everybody talk about, the open banking in the US marketplace is being driven by the market itself. And so I think that begs a very straightforward, but maybe difficult to answer question, a very nuanced question, which is, as we think about open banking in other jurisdictions, how much of that can be delivered in the US marketplace in the absence of regulatory requirements like what we've seen, Alex referenced elsewhere, like for example, in the UK with the open banking implementation entity. And in your view, where do we stand against what the market can deliver versus where we're at today in the US?
Yeah, so I think the sky's the limit, in short. Different banks have approached this in different ways. Some of the banks have, not jumped into the mix just yet. And we see this landscape evolving. Some of the early companies in the space, whether, like Mint, Plaid and Finicity, have taken the lead in terms of establishing that data aggregator platforms based on customer consent architectures. And that has kind of pushed the banks into action to be able to, stand up their own infrastructures to be able to support that. But it's really up to the bank. So at BBVA, we look at open banking as a key enabler for partnerships, and it's a key part of the growth strategy for the bank. And as part of open platform, we offer APIs that go beyond just data sharing on the customer's behalf. You can actually, our customers, our clients, and our partners can actually onboard net new customers, accounts, business accounts through APIs, together with card issuance, as well as a rich set of payment rails. So on the platform, we have all the way from neobanks to solutions for gig economy workers, to solutions for personal finance management. And we have done that in a way such that between the bank and the partner, there is shared responsibility in terms of the customer data, in terms of the risk and the compliance that needs to be adhered to. At the end of the day, the bank is a regulated entity, right? We have all of these different programs and frameworks in play, whether it's customer data privacy, whether it's third-party risk management, whether it's InfoSec and cybersecurity. That is, how do we best adapt it to open banking? And that's the trick. And we've taken a good stab at it. Been a fairly sizable investment for us. And I think in the absence of the regulatory diktats, it's really how best we adapt those programs for open banking.
So if I could, Jeanette, maybe I'll ask you a question. You referenced your former regulatory background here. And Sam, I'm going to put a pin in a question about APIs for a moment, if I could. Jeanette, maybe I could ask you to kind of put yourself back in your regulatory seat, put your regulatory hat on for a second. So we've got a situation, at least in the US, where open banking is being delivered primarily right now through bilateral contracts, right? Between the holder of the data and either the aggregator that's delivering the data to the third party or the third party itself. To what degree, in your view, are customers protected in that framework where it's a bilateral construct versus a regulatorily prescribed construct?
Mm-hmm. Yeah, it's an awesome question. I think part of what I want to talk about is there's kind of questions around what protection means, right? So on the one hand, a lot of the open banking discussion tends to focus on benefits to consumers of consumer choice and freedom, and the consumer's right to move and control access to their financial data. So theoretically, this provides the consumer more tools to manage their well-being. This also makes liability more clear for companies that are involved. And from the consumer access standpoint, there's those with thin credit files can easily turn on the sharing of their information. They can turn it off if they've had trouble with getting services in the past. It may help them get validated and provide more information about their backgrounds. And also, payments should be faster, right? So there's those kinds of considerations. There's also risk mitigation and security angles, right? That everybody always talks about. Open banking will be more secure and safer, which should help with liability for data breaches. And when we're moving from a credential-based system to an open banking system, the vulnerabilities that should go away. However, I think what's important when we're talking about consumer protection is to understand that there are a lot of different aspects to consumer protection. And, in our system in America generally, we have created a huge regulatory system with 8 different financial regulators that enforce a whole lot of regulations. And, theoretically, if it was just a free market system, consumers will move their data to the provider that provides the best security, privacy, and services. However, that relies on highly informed customers. It's unclear if there's evidence to back the fact that consumers will be informed enough to pick best in class. And that's generally, kind of the theory of regulation, why we have regulation in place, to dictate security, risk, and privacy, fraud, and all kinds of other regulations, because generally the market has not always done the right thing, right? And so going back to the question of what does consumer protection mean? I think it's pretty clear that it's clear that there's not clarity on the fact that consumers will understand what it means to go through these flows, right? So on the one hand, we say, okay, well, there's all this consumer choice. This is great, but I'm not sure that it's clear that consumers understand the choices. In preparing for this panel, I personally went through a couple of the large banks' flows in the last couple of days to provide access to my data. Most of them have 5 or 6 screens that you have to go through in order to provide your data. And, there's all these statistics around, the vast majority of consumers not understanding what open banking is. I think 92% of consumers in a Wired article recently said they have never heard of open banking. Generally, we know that people find data sharing really scary. So I think the consumer protection is unclear when we're talking about level of comprehension of what this all means. The other thing that's interesting, I think, from like a financial institution and kind of infrastructure standpoint is, this is when we're talking about the market system, we're kind of relying on the financial institutions themselves and the third-party providers to be good actors and to agree to a set of principles. And there's a lot of trust in the system. So what happens if the banks start charging for accessing the data? What if some people can't afford that? Does that mean that there's impacts on kind of disparate impact and fair lending, fair banking for people that either can't afford that or for apps that can't afford to pay the banks? So there's questions of fairness and protection. And I think there's also questions around whether it really is more secure, right? So there's also questions of how vigorous are security measures used by the banks and the third parties? What controls are in place to enforce the consumer decisions? And then, we're kind of somewhat, open banking creates more reliance on third-party providers' security standards, which may not have, well, we know that those don't have the same regulatory scrutiny and regulatory oversight. The OCC guidance that I mentioned earlier recommended that that banks put into their contracts with apps and third parties certain requirements around security. But, contract law isn't perfect, right? Like the regulators themselves are not going to be supervising every third-party provider. And so I think there's also a question of how secure is it really, and access to financial services. So I could go on and on. I'm sorry, I've gone on too long.
No.
Thank you.
Not at all, Jeanette. So I guess, Alex, Abhishek, maybe I'll ask either or both of you as the bank representatives on this panel. I think the other thing that we would be remiss if we didn't touch on is through some combination of regulatory requirement or customer expectation, in the US and Canada, we have been raised basically for decades to expect that if something goes wrong, you call your bank and your bank will make you whole. And I would imagine, and please let me know your thoughts on this, but that is also at the heart of the customer protections that the banks are thinking about as we move to a market-driven open banking approach. Is that fair?
I think it is fair. And I think everything that Jeanette has said is spot on. They are very, very important considerations where how effectively you can market a concept. Open banking, for example, sounds a lot more attractive and perhaps acceptable than open data sharing, right? And some of the gyrations that we went through as an industry to figure out what to call the thing. PSD2, not nearly as marketable as open banking, right? But in North America, in the United States, the need to have a financial institution still be more trusted to protect the customers, I think, is paramount. And that's what everybody considers, where all the agreements in the world, all the technology in the world cannot fix a broken relationship. So the banks have to be especially diligent about protecting their consumers, their small businesses, their corporate customers. And the concept of open banking is therefore this idea that if there is a service that can be improved by granting access to a third party, that the banks will still keep in the back of their minds, regardless of what the regulations say, regardless of what all the legal agreements say, the bank will ultimately still be responsible for their customer because it's the right thing to do.
Oh, yes, spot on. There's no two things about it. Any customer that we onboard through third-party channels is a customer of the bank, right? The same rules, regulations apply, even more so because now you're working with a third party and you want to make sure that you protect the bank's interest, more so the customer's interest, and you follow all of the rules and the regulations in place. So in crafting our risk and controls framework to be able to work with our partners and clients, not treat them as vendors, is key. Bring to the fore what are the compliance obligations on the bank's part and how it is a shared responsibility with the partner is very key. Understanding the due diligence process that we put our partners through, and then be able to comply with the ongoing monitoring so that the customer's data, the responsibilities on the partner side and that on the bank side are clearly articulated and satisfied is very key. Like I said, we launched BBVA Open Platform back in 2018, and we have been iterating through our due diligence and monitoring program to do partnerships at scale, to be able to acquire net new customers and engage them through third-party channels. So it's definitely been a journey, and without it's something that we have consulted just outside of the bank as well to be able to formulate that program to be able to do this at scale.
I want to put a real quick fine point on that. I totally agree with everything Abhishek just said. And BBVA and Kabbage, we know each other and understand each other quite well. And I have to say that they've done some pretty incredible things. Not all institutions approach it the way that BBVA does, for example. In many cases, it can be difficult for third-party platforms to get over that hurdle of working with banks. So I want to point out how in one case, industry is leading to make this a little bit more palatable for upstart fintechs and service providers. So for example, Kabbage and other well-known respected brands like Citibank Group and Visa participated in this almost 3 years long World Economic Forum process that resulted in a series of reports, the most recent one, the Systems of Cyber Resilience, Secure and Trusted FinTech, as part of the cybersecurity, and open banking working groups and subgroups. And the concept of this, we call it the cookbook, is that we absolutely need a global standard, whether you're talking about third-party vendor risk management, cybersecurity resilience, data access, data privacy, et cetera. But two very important distinctions. Number one, the customer expectations and, of course, regional regulations will be different based on the accepted cultural and social values for a jurisdiction or an area. And that's something that industry has to not only be aware of, but very responsive to. In some cases, that is dealing with the existing legal structure, but more often than not, rising to the occasion to meet the level of trust and security expectation that your customers demand. The other piece of that is scalability. So I don't mean scalability as in accessing as many markets as possible. I mean looking at the risk framework. And so what we did in the cookbook and the overall report is try to break down different risk profiles, the different business models or specific types of data users or data aggregators or data generators will actually create inside of a larger vendor management risk model and framework. There does not need to be a one-size-fits-all model to this. In many cases, a fintech engaging in lending or a fintech engaging in payments or a fintech engaging in customer data insights for the purposes of budgeting or accounting will present very different risks to that institution, very different risks to that customer in terms of financial liability or data liability. And the corresponding institution should be able to evaluate those risks commensurate with the business model and apply the appropriate but not overly prescriptive nor overkill safety and standards and other guardrails to that to maximize, yes, the security side of the equation, but also the customer benefit side, right? You want to be able to provide those services. So one example of a dynamic standard that's being developed on a global scale that we hope will trickle down into some of the more important Western regulators that we're participating in this, as well as a lot of the emerging economy regulators, to try to make this applicable to their local regime.
Sam, I want to, if I could, I want to stay on standards, but maybe ask you about standards on the other side of the ledger, which is the technology side. So as we've heard, a lot of work is ongoing in the US and Canada and in Mexico on the move from kind of legacy technology, whether that's screen scraping or OFX or other types of technology, to APIs. When you think about other markets, and we picked on the UK, so let's keep picking on the UK, there have been prescriptive mandates that anybody who plays in the open banking sandbox has to use one API, and it's the fit for purpose API that everybody's got to use to get into the sandbox. The US is a very different market in particular, right, compared to the UK or really many other financial services markets around the world. As you think about standards on APIs in particular, where do you think an API standard would work or wouldn't work in the US market?
Sure. So, and I do think the scalability piece and a risk model for different vendors and different data profiles is important to this conversation. But going back to the customer use case, it is super valuable to have a technology standard, right? As a customer, I want to be able to have a frictionless experience moving across different providers, whether that's to comparison shop, to engage in active financial management, to do affordability checks, maybe where I provide a one-time or limited scope access right to a certain provider for my data. And of course, I want to have a fairly uniform fraud standard there. That experience, though, is not going to be born out of a vacuum. It's not going to come out of thin air. There are lots of assumptions that industry and the regulators need to build on before that. So in the UK and in other successful open banking jurisdictions, many of those standards were already in place, whether it's the uniform, basically, acceptance of what the customer experience and standards should be, whether by regulatory decree or kind of more of a homogeneous system, or the baseline characteristics to develop that standard. So this concept or this parallel to the Bluetooth standard is frequently mentioned with respect to open banking, and it's a great analogy. You want to be able to have interconnectivity across multiple devices, multiple systems and manufacturers, so on and so forth. To get there, though, we need to examine what the technology standard would actually execute upon. And that technology standard is going to execute upon the concept of the data rights. So at the end of the day, who has ownership over that data? Is it the institution or is it the customer? Is it specific types of data that we need to look at for that? And how can that be authorized? How can that be authenticated? Then you look at the next obvious question there, which is digital identity. You can't really execute on that if you don't know who's authenticating, who's authorizing that data. Beyond that, though, we're looking at how the data flow through the system. And so it's very important that the United States start to examine the liability function of that. When we execute technology instructions to move data from provider A to provider B, with an ownership tag on that data, what happens if the data are leaked or the data are breached or somehow misused by one of the providers in the chain? We don't really have a great answer to that for different institution types and structures. Now, moving kind of down that stream of logic there, if we can figure out what the liability and responsibility for that data are, how do we know where an event, whether it's a breach or a misuse, occurred? There's a traceability function that needs to be built in there, whether through kind of a legal and regulatory-based examination process that's agreed to by all of the participating institutions, or a technology standard in and of its own there. And frankly, I think that you could explore more on the blockchain there. You can check your bingo cards for tech bingo for the week. So look, technology standards are incredibly useful. In many cases, there is a requirement or a necessity for the government to engage the industry stakeholders about this. But at the end of the day, we need a solid set of principles and frameworks to build on that, privacy, data security, and cybersecurity included, to be able to execute. And going forward, you need to make a structure where you're not creating a static regulation. You don't want to be using tape players for the rest of your financial life, to draw out one more metaphor there. You know, when I can airdrop music across my phone, or obviously access it on Spotify. The same applies for financial data standards with respect to usage, rights, traceability, privacy. And of course, at the end of the day, the customer wants the experience to just work.
So I guess that's an interesting point, Sam. So you're talking about one end of the spectrum where, you know, 5-10 years from now, technology might advance, and some of the more sophisticated players might want newer, more innovative technology. But the U.S.
not only will technology advance, but the business models will advance. We're already seeing neobanks get chartered in other markets, and a potential opportunity for that to happen in the United States, where they may engage in an incredibly complex structure of shared service agreements. And you as the customer may have a relationship with one brand, but in terms of who owns your deposits responsibilities may exist in 1 or potentially 10 banks across the financial ecosystem. And so you need to be able to tie that back from both a legal and a technology standard.
So for me, that begs a related but somewhat different question, right? Which is, we have representatives from 2 of the most sophisticated, advanced, capable financial institutions in the world on the call. But, you know, as Jeanette, Abhishek, and Alex will acknowledge, we have thousands of smaller financial institutions in the US who, you know, the farther down that long tail you go, the less capable in terms of resources or technology some of those institutions might be in getting to this endpoint. So I guess open question for the rest of the panelists, as you think about that long tail, which is critically important to the US financial system, but also represents a significant challenge in this context, how do you think we get them there?
Here's my view on that. So, you know, I've been doing APIs in some form or the other before they were even called APIs for almost 20 years now. So strictly speaking, technology standards should not be very prescriptive, because they run the risk of being legacy, you know, by the time they see the light of the day, right? But agree with the overall principles around privacy, liability, security, you know, the traceability that Sam outlined. So I do agree there has to be some minimum standards across all of those principles to capture it all. And at the same time, you know, given how complex our Federal Reserve System is stateside, it needs to be national. We cannot have more and more of the, you know, state-specific CCPA sort of standards hitting us, because that just makes things much more complicated. So, so again, I think there is a need for some minimum standards, overarching all of those bits that Sam touched on. You know, this is not, that said, this is not net new to financial institutions, right? I mean, again, we have some of those same frameworks and programs in place, whether it's cybersecurity, customer data privacy through CFPB, the third-party risk management framework, but it needs to be more adapted to the open banking play. And I also completely agree. You know, it depends also on the use case, right? It's starting off with sharing of customer data on the customer, you know, based upon customer's consent. But like I said, open platform supports originating net new customers and bank accounts and card issuance and whatnot. So depending on the product that we are trying to API-fy and the use case that it sits within, it has to have the right set of boundaries, whether it's you know, legal, the third-party risk, or you know, what regulations apply, and also the client risk. So it's not a one-size-fits-all, and really it depends on the use case and what the, you know, bank or the financial institution is looking to get done. But you know, nonetheless, there is a need for a minimum sort of a standard at a national level.
So Stephen, to answer your question, I don't think the large majority of the banks in the United States or elsewhere around the world ever want to undertake the journey where they build their own banking systems. They rely upon technology providers to craft their payment systems, their interfaces, their online customer screens, their back-end databases. And I think those technology companies are working as hard to make the best use out of any open APIs that are available as the banks are in evaluating which use cases are appropriate, when to go hard on a specific security requirement, and when to sort of ease up in the spirit of making sure that our customers are well served. And therefore, for the banks in North America, I think a lot of the conversations here for exchanging data securely, for example, there are participants from the creators of those banking technologies. And those creators, whether they are the Fiservs or the FISs, right, or even going as far up as the IBMs, right, they will have to pay attention and sort of participate in the same sort of conversations. There's always the comment that, what happens if Amazon or Google or Microsoft is trying to become a bank chartered entity? And that's going to occur as well. And the idea is that we will continue to pay attention to and learn from each other, because to do otherwise would not be, again, in our best business interests. So the prescriptiveness from the UK, that I think was a moment in time. I mean, even now, the UK has proposed regulations for, say, requests for payment that was very global in nature. I like it quite a bit. And I think we can all learn from their first attempt, which is, thou shalt pay payments in a certain way, thou shalt get information in a certain way. And then they realized that they adapted it, they learned from themselves after, say, Australia took their model, evaluated it, and implemented it in a different way. The United States, because we haven't been there, and there's really this, whether or not American exceptionalism is really going to allow us to create a national standard of open banking and data sharing. I think there are opinions on both sides, but the need for a standard, while true, the ability to achieve the same goals even without a standard, I think will be facilitated with a lot of the interactions that technology companies normally have. And even talking about airdropping things, right? It's like the opposite of open banking. To be able to get access to Apple's technology and their way of doing things. I have a dongle that gives me 3 different power cords, one of them which is a lightning cable, because Apple is so exceptional about doing things their way. Hopefully we're not going to get to that in the United States, where you have, this is the Bank of America standard, this is the Wells Fargo standard, because that's just hard, right? And we're not in the business of making work for ourselves. We should be in the business of making things work for our customers.
Totally agree. And the uniformity piece is not lost on me. And I do think it needs to be very dynamic and responsive to the technology and, frankly, the security environment out there, whether you're talking about intrusive or fraud-based security perspectives. But for our smaller institution and community banker friends, I want to make sure that they're not left out from this, much like the kind of stepwise function that we have for the World Economic Forum security profile that's looking at the risk profile and looking at the institution type. The community banks not only need to be in the conversation at the table, but they're not, in reality, not going to be able to conform to a standard that's going to hard over at any one time. So we need to have an opportunity and a pathway for them to inch up at a reasonable rate, but inch up to whatever the standard is, realizing that there may be legacy systems, legacy technologies, and legacy methodologies, whether it be screen scraping, moving to APIs and tokenization, or what have you, that are going to need to exist in parallel as we work towards this, so as to not leave out their specific customers. And frankly, if we do leave those customers out, those customers risk alienating that institution. And that, at the end of the day, is what's going to drive the conversation for these banks is, how am I serving my customers? Can I continue to retain my customers? And can I attract new customers with evolving processes, technologies, and offerings?
Thanks, guys. So I have to admit, I had blockchain, I had Amazon and Google getting into banking. I did not have American exceptionalism on my bingo card, but Alex, we're going to put that on the side. But what I did have on my bingo card, and where I'd like to finish up in our last few minutes, and Jeanette, I'll maybe ask you to start on this question, is the way that all of these panels typically end when we're talking about open banking, which is the prospective theoretical view of where you think things go from here. So Jeanette, maybe starting with you and then going around. Looking into your fintech crystal ball, we're 5 years from now. Where do you think, or where do you hope, either one, your pick, we are in the evolution of open banking in the North American continent?
Sure. So I think also kind of adding a little bit from the last question, which is that I hope that we have a kind of a minimum standard that is kind of transparent and kind of brings together some of the best of both, kind of regulatory infrastructure, but also with market-based solutions, so that we have the minimum standards, we have some equalization of community banks and larger institutions, and also, kind of ability of regulators to look into what the fintechs are doing, because I think when we're talking about community banks being able to be part of open banking, a lot of the way they're going to get there is by partnering with fintechs and outsourcing a lot of the technology and getting the kind of their systems ready for API readiness, which many of them their systems are not ready right now. And so I think there needs to be something related to how the regulators are going to be looking at the fintechs that are actually the ones partnering with the community banks. And I also want to go back to what I said earlier, which is that I think that there needs to be some thinking about how do we get this kind of consumer paradigm shift where consumers are able to understand what is going on. Because I think the worst case scenario is if we're just kind of creating another CCPA type situation where, I think people agree, okay, privacy is important and people should understand what's going on with their data, but the way the CCPA disclosures have worked is not very helpful to the average consumer. Everyone just kind of clicks through and nobody's requesting, I shouldn't say nobody, but very few people are requesting their CCPA rights to be exercised. And so I would love to see that where we go is that, it's understandable to consumers how they can exercise their rights to move around their data and what it can do for them. And also just, to the question, I think that sometimes the open banking proponents, we talk about this picture that, everyone wants to switch their bank accounts every day to move around and chase yield. And I don't think that's necessarily true, right? Like it's not necessarily true that everybody wants to move around their bank accounts every day. And it's not because it's hard to do so. It may be because people just don't feel like it, right? Like there's other things going on that are related to consumer choice that are not just because it's sticky to stick with your bank. So I would love to see, kind of how do we always keep that end user in mind and the consumer in understanding what it means to move around their data? How does this open more opportunities for them? And how do we make sure that those opportunities are equal for both kind of a diversity of consumers, but also across community banks and large institutions as well?
Alex, I'll ask you to go next.
Okay. Well, I have some hopes and aspirations. So I hope in the future, what we'll see for open banking around the world is the increased consumerization of how we handle corporate businesses, and that we will be able to have honest conversations about why are things so difficult for corporate banking, and can we make it simpler by using open banking concepts, by using open APIs. And I hope that we will be able to still plan not just for the benefits of open banking, but also what to do when things go completely sideways. I agree with Jeanette that it is necessary for consumers, account holders, people in general to be educated, because the last thing I want to do is, if I had to compare it to the situation in the United States, for a vaccine to be produced and people don't know what a vaccine is and choose not to take it. So I would hate for there to be open APIs and for people not to understand what it means or how it can benefit them. I want people to be educated in general. So I am hoping that as the open banking journey continues around the world in all the countries, that those consumers, those businesses, those corporations will be able to honestly say, yes, I understand what this means, and I can use this to improve things for myself, my normal business as usual activities, as well as the customers, the consumers that they serve. So open banking becomes bigger than just banking.
Abhishek, your closing thoughts?
We're living in the times of platform economies being the dominant part of consumers' lives. We've had a crop of fintechs over the last decade, some of them now public companies, pretty dominant public companies. And in the last couple of years, we have seen how the big tech, whether it's Uber, Apple, Google, have announced their forays into financial services by partnering with banks. We just announced the partnership with Google to be able to offer a co-branded digital bank account through GPay. So looking 5 years ahead, I see more and more of that happening. I see majority, if not all of the banks standing up open banking capability. And I think that's where having some sort of a minimum standard and principles across all of the things that we talked about would be really beneficial. And at the end of the day, it is the customers who would benefit. There'll be a higher level of engagement with the customers with financial products that are getting embedded and being offered contextually. There'll be higher financial inclusion. So all in all, great things in store for the customers. And we're already seeing the market starting to go that way.
And Sam, your closing thoughts.
So my hope for 2025 is that my parents, typical consumers, will know and understand that they have a right to permission their data to different providers, and that they'll begin to get comfortable with doing that. I recognize that much like using your credit card to shop online in the early days of the e-commerce boom was a little difficult to educate consumers on, my parents included, that there'll be a little lag there and a little industry education that has to happen. But eventually they'll know and understand their rights, they'll use their right to permission their data, and they'll begin to feel comfortable with doing so and trusting the process, the experience, and the standards behind it.
And my hope, not for 5 years hence, but for the next time we do this, is we can do it in person, healthily and safely. So thank you all very much for volunteering your very precious time. I thought this was a really good, substantive conversation on a really nuanced, important, and vital topic for the economy. And I hope that all of you will stay with us for more great content from the main stage. Thanks very much. Everybody. Take care.